Hi there and good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah. Sorry, let's just get my bearings right. Anyways, um, yeah. So good morning. It's the first day of the new series, if that holds any importance. But it's also a day after uh, the Maharashtra High Court asked the state of Maharashtra to consider a 15-day lockdown like the one that was there in 2020. It's also a day post the exit polls. It's also a day when Chris Wood of Greed and Fear has added India back to an overweight position. And by the way, you will hear Chris Wood's conversation with me on our series Navigating Through Uncertainty today on Bloomberg Quint at about 1 p.m. So you might want to tune in for that. You should tune in for that. It's Chris Wood, really, and for all of us should listen to it. Anyways, let's try and get the bearings of today's session right. First, get the US markets up, and they had a fairly choppy, volatile day of trade. Um, they were down in the red, some of the indices, including the NASDAQ. Then they came back. Amazon, after hours, did really well. So their numbers beat estimates. Curiously, Apple, which did really well, erased all of its gains because people thought, oh, Apple will not be able to repeat the performance going ahead. So that's the nature of the move in the US markets that happened overnight. Now, interestingly, the Asian screen today on the screen, we will come up on your screen next, and then you will see what Asia is doing. I think, again, much like yesterday, it's a bit of a mixed bag, but with a negative bias this time around. Yesterday, we had a positive bias for the rest of the Asian screen. In today's trade, it is not so. And that's why, while the Sensex is eyeing 50,000, right, we were briefly above that level as well in trade. But while we are looking at, I mean, we set for the best week since early February, despite the virus surge, and therefore in and around those levels. The question is, will we do that? Uh, Stay close above that mark? I think that's the difficult part. If you look at the SGX Nifty, for example, in the session today, you will see what I'm talking about. It is starting off about 150 odd points lower. And viewers, this shouldn't surprise anybody because uh, not because I said so, right? I mean, we were talking about being cautious in the last couple of days and not add leverage long in yesterday's session as well. Frankly, if you look at the trade setup in yesterday's session as well, while metals did really well, almost all the other sectors showed sluggishness, right? Banking went up and then came off. Even banks like HDFC Bank came off. Yesterday, when we were saying that leverage longs is not a good idea to take, there was some basis to that. Now, I believe that unless the index shows a very decisive up move, which is not going to happen today, it is very unclear as to markets can further shrug off lockdown tools. Now, with the current positions the way they are, we're having some issues globally and locally, by the way, on the markets front. And then states like Maharashtra are saying that, oh, I mean, it's not a done deal. And we know that the state governments are, or the national government also is reluctant to enable a full scale lockdown. But there is a case for restrictions to be in place and maybe further intensified simply because the cases are just moving up. And at some point of time, you have to think about the healthcare system and not just about business. So don't quite know which shape and form this will take. I'm not an expert, so I won't want to picture or say whether X should be done versus Y should be done. I'm hoping and I'm believing that there are wiser forces at play to decide whether or not there should be a lockdown or not. But yeah, the virus cases continue. Hopefully, we see a peak. Mind you, if you are thinking of betting on autos, just be very, very careful. I think a lot of people, and that's just yeah, the auto sales numbers will have an impact on the performance on almost all the auto companies on Monday. The reason I say this is that because uh, April of last year is almost an incomparable month because the activity was muted, except for Bajaj Auto. I don't think too many companies had some sales also. So people will not do a YOY comparison. Keep that in mind. Some brokerages are comparing April of 2019 to April of 2021, and then trying to see if there is a growth, degrowth, or what's the extent of degrowth. Some people are doing a sequential comparison as well. And there have been micro lockdowns which have impacted performances. The Point Hero, which has said that they'll keep the plant shut, all of their plants shut for 4 days. It will not impact sales, but that showed that sales had come off. So just be very, very careful if you're trading auto in particular. They might have a fairly choppy movement on Monday. So you've got to keep that in mind. FIs continue to buy though. 2 days on a trot now. We've had FIs add positions to India. And as I said, Chris Wood has actually added India overweight. He kind of indicated this in this interview which he did with us, which we've recorded and will play out today. So you want to tune in for that. As I said, be interesting to see the FI positioning over the next 2 days. Could Reliance impact that? Maybe it couldn't. Reliance and IndusInd Bank are the two index names that come out with numbers. At the broader end of the spectrum, it's not a very heavy day. I mean, interest-wise, Yes Bank could be interesting. Marigo would be very, very interesting because of the raw material cost pressures, but because how some of the other FMCG companies, small like Bajaj Consumer or large like HUL have done, very interesting. Canfin Home promises to be a very interesting number. There is for chatter of some deal happening, so watch out for that as well. All of these should keep the earnings picture in perspective. Now, it's going to be a slightly long trade setup viewers because there are a bunch of earnings that I want to discuss at length. Ambuja is probably the standout performer of the day today. Cement has anyways been doing reasonably okay, but Ambuja Cements, to my mind, is one of the key stocks to monitor. Q1 volumes at about 7.7 million tons were up about 24% YOY, or broadly in line with estimates. But the realization was marginally above estimates, 2.9%. Yes, EBITDA really beat 1% uptake. 980 crores of EBITDA is up the consistency by 31%. And why did this happen? Because they were able to contain costs. The cement cost per ton at 3688 was surprisingly down at 230 per ton. And operating cost per ton declined as well because of operational efficiency in plants. So they did exceptionally well on the cost front, and which is why I think Ambuja might actually get a big thumbs up in the session today. Brokerages by and large have been constructive on Ambuja's numbers. So watch out for this one in the session. Do watch out for persistent systems in the session. IT is not quite in favor currently, but persistent did really well in quarter four. Dollar revenue up 4.6%. The beat in revenue was led by continued traction in the TSU business. They signed a total TCV of about 264 million, 246 million, excuse me, which was down on a quarter-on-quarter basis. I think third quarter they had northwards of $350 million. So third quarter was exceptionally strong. But since they've done $250 million or 246 to be precise, it's indicative of sustained momentum in FY22 because they'll have to execute all of these deals. So strong numbers, good deal signings, a bit up about 7.4%. All of these should add to the luster and persistence. It's not very cheap, but it's not very expensive either, and therefore it might find some traction today. What might find some traction is Titan. I'll spend some time here. So Titan revenues were up 59% on a YOY basis. And of course, remember March last year had that anomaly, right? But I'm just looking at it compared to estimates, they were below estimates. 7494 crore was the actual number, and they came in at 7516 crores below estimates. Net profit 568 crores was above the estimates of 549. But EBITDA and EBITDA margin, both of these were below estimates for Titan. So largely a bit of a disappointment. Now, contrasting views here, I'm bringing both. You can decide what you want to do with Titan. Motilal Oswal is bullish. They are saying that Titan's medium to long-term growth earnings trajectory, growth opportunity is best of breed, which is reflected in the EPS CAGR of 24% in the past 3 years before COVID in FY21. So FY17 to 20, CAGR of 24%. They believe that this is the best in breed. And there's a strong growth runway because Titan's market share is only 10%. And and there is continued struggles of unorganized and organized peers. Now, very valid argument. But Motilal believes that they can give 60p multiple to Titan. Now, contrast that with CLSA. CLSA is saying that amidst the near-term uncertainty for Titan, their estimates and target price of 1370 remains unchanged because they maintain their sell rating on a valuation. They believe the valuation is expensive. They are only willing to give 50 times FY23 March 2000. So it's a difference of what multiple you give to Titan and what multiple you believe the market will give to Titan if you want to really trade Titan. I personally believe it might start off slightly sluggish today, but let's wait and watch. The management speaks to us, I think, between 9 and 9:30 sometime. So that might be an interaction that probably could give you an idea or two, because I will be asking you some tough questions about what does happen with the near-term growth trajectory. I'm also using CLS's note on Shriram Transport to tell you what STFC could do post results as well. The CLSA is saying that while valuations have been reverted to just below average valuations, the high market share in used commercial vehicles will limit growth to below peers. They believe that the net interest margin recovery is sharp. They maintain the buy rating with the target price being raised to 1700 from 14. Watch out for this one. And watch out for IndiaMart and Motilal. Both of these are interesting numbers. IndiaMart because of the platform business that they have. Very interesting. Revenues up 6%, PAT up 26%, EBITDA up 63%. So all of this should be positive for IndiaMart and Tamesh. But Motilal Oswal is the mid cap or the small cap stock of the day. Revenues from 624 crore have moved up to 1143 crore. After tax of 448 crores versus loss of 253. Their broking business clocked in the highest ever revenue and profitability. And there's a sharp reduction in cost of funds driving the margin expansion in home finance business. And we all know that the AMC businesses by and large have done well for everybody. They've done well for Motilal too. Net, all three cylinders for Motilal Oswal firing. And it is showing in the way the numbers have come in. So we know that brokerages are in a sweet spot. Yes, online brokerage is more so than offline, but Motilal too has had a good run. Therefore, this one could be the very interesting mid-cap stock of the day. There are others, by the way, that could be focused. AU Small Finance Bank. I already spoke about IndiaMart Intermesh, or for that matter, Persistent. But somehow I think Motilal Oswal takes the cake. So do watch out for this one in the session. Lastly, what stood out for me, interesting thing happened, and I would urge you to read more about this. It's there on our website, but you can go to any website, by the way. But I'm just saying it's there on our website if you want. A special resolution to appoint Samit Ghosh as the CEO of Ujjivan Financial Services was defeated as it didn't get the requisite share of votes. Typically, they need 75%, but they only got 70%. And apparently, the dissenting votes were all minority shareholders. And this is very interesting. And paucity of time, I'll get into details of this, but just as a corporate development is very interesting. And therefore, I tell you, I urge you to try and read more about this. Like I said, on any platform, but yeah, our website also has it, so you can log into BloombergQuint. But viewers, more importantly, whether you are in Maharashtra or Delhi or wherever else in the country, Kerala is showing spikes of cases, West Bengal is showing that. Please stay safe. Please wear your mask as you go out in public. Try and wear a double mask if you have to. But just stay safe. Let's break this chain of the damn virus. Thank you so much for tuning in today. Have a good weekend.